All right, it's Friday, everyone. So you know what it is? Live stream time. Welcome today. Live stream. Viva Technologies, as you guys know. I am Gershom. Next to me is our Vice Chair, Mr. Jingao.
Hello.
Hey.
All right.
And on the linking in, our Executive Leader, Mr. Jason Wong. What's going on, Mr. Wong?
Good evening, everybody. Doing well.
Charlie Gasparino was right.
Nice.
Coming up.
Awesome. And on the background, as you guys know, our producer, Mr. James. What's going on in California, James? How you doing, bud?
Doing well, man. Doing well. Hanging in there.
Nice, nice. Glad to see you guys today. It's awesome. A lot of stuff happened this week, guys. Mainly we had some big announcement for the company. Our CEO came on and made a big announcement that we are increasing our hash power. And that was fantastic. These numbers just blew my mind when I first saw them. So I hope you guys are excited about that. I know that our vice chair was on a small vacation, just got back. How was the vacation,
Yes,
Mr. Gal?
it's very good, nice and relaxing.
Yeah.
Now I'm ready to get back into Bitcoin. Actually, I was never out of Bitcoin. Even on vacation, I was talking about Bitcoin the whole time. Right?
I'm sure you were. I'm sure you were.
But good to be back. And yes, I'm excited about the new hash power. Of course, now you get 60% more, which means they're mining 60% more. Right?
Yeah.
And what's so good about for all of us, the members, yes, we can grow our business faster. And of course, the people that you refer, not only they get 60% more, but your referral gets 60% more too.
Absolutely, 100%. Mr. Wong, I know that you were
Yes,
super excited about the announcement when it first came out. I saw when you look at the numbers, your eyes popped out of your head. You couldn't believe those numbers, right?
I know. It goes back to saying, what a nice, fantastic job our CEO has done for all of our members, right? He constantly monitors the Bitcoin price and the mining difficulties and constantly monitoring the energy deals and these mining machine deals. So as soon as he was able to secure a nice batch of mining machines with some new energy price, he passed the savings, out down to our members. So, which very, very much appreciated. So.
Yeah. You know what they say, everything starts from the top, right? I know sometimes people hear us talk about our CEO and our executive team, but, we have a great CEO. We have great leadership, with a vice chair, with you, Mr. Wong.
Thank you.
So everything starts at the top, guys. And we have some great people, fantastic, super smart people. And I always say this company is customer centric. Everything that we do, yes, it's a business. We get that. I mean, I'm not going to minimize that, but we pretty much do everything customer centric to make sure that the customer always get the best product that's on the market. So awesome job for a CEO. So we got a lot to talk about. I know that things are kind of heating up with the COVID-19. Cases are spiking everywhere. I've seen some talks that they may be thinking about closing things down again, doing the stay-at-home thing. I hope it doesn't get to that. But, it's not looking good as far as the case is. And I was just talking to James right before we went live, and he was saying how he read somewhere where they start to say now that they're believing that the virus actually is airborne and that it stays in the air for a certain period of time. So I think that's going to pose another set of challenge. And I'm not sure if we're prepared for that, because if that's the case, if it's staying in the air for a certain period of time, right? So that means if you're outside, you can't just be wearing a mask. You're going to have to cover your eyes also, right? Is that what that means? I mean, what do you guys think about that?
Yeah. Go ahead, Jason.
Yeah, that's what I believe in, actually, very early on, because there are evidence coming out of one of the top infectious disease doctor in Hong Kong that kind of spearheading this COVID-19 epidemic prevention program and team. And that's one of the things that he's been saying all along, that this thing is aerosol. What it means is, it can stay in the air for hours at a time, for a very long, extended amount of time. And so that's why every time when I go out or any of my family members goes out, we always wear not only a face mask, but also, an eye covering protective, device. So the idea really came from the fact that in Hong Kong, a lot of people lives in a high rise, right? And they have numerous cases where people from, people that have been infected with COVID-19 start infecting the units directly above them. And, when the expert went out there with the engineers and the infectious disease doctors, what they were able to find and piece together was that the only possibility is because, when someone flushes the toilet, right, it went out through the window, meaning like they didn't cover the toilet seat, so it went out through the window, and then it got sucked back in to other levels of the buildings. So that's the story that they the evidence that they were able to piece together. So I always go out and not only wearing my face mask, but always wear my eye protective device. So be careful, guys.
Yeah, and I have read several articles about that too, about being airborne or staying up in the air. And I actually, my wife bought me kind of almost like a face guard, a face guard that covers your eyes all the way down, almost down to your neck.
Okay.
So the whole transparent face guard.
I think I've seen those been advertised.
Right.
Yeah.
You feel a little silly wearing it, but
I'd rather feel silly and be protected. I tell you what.
I know.
I feel silly all day long. I want to fight coronavirus, man.
That's what I do when I go into a supermarket when there's a lot of people.
Yep.
I like to wear that.
Yeah.
Yep.
A little bit silly, like I said, but it's okay.
Yeah. So I know this is not a coronavirus show. I don't want to keep it all coronavirus, but one more thing I want to talk about that James and I was talking about also before we went live is that they're realizing that people who are infected with coronavirus, it actually alters their brain function. And so even though they recover, they have brain damage from being infected with the virus. I'm not sure if you guys have heard anything about that, but that's one of the things that James was saying. Hey, James, you want to elaborate on that a little bit that you and I were talking about?
Yeah, they're saying that it's not, only a respiratory disease. It can take many different forms. It can have literally pretty much every symptom possible. It can manifest differently in different people. And a lot of people are reporting after they do recover from the virus in the weeks and months, they don't feel totally the same. They're still dealing with a lot of either physical pain or sometimes just really horrible dreams from either being in the ICU or whatever. And recent findings looking at autopsies after people have passed away or whatever, they've seen significant damage to their brain. So it's scary in that sense that it can take many different forms.
Wow, that is scary, man. So listen, guys, we're not here to do the doom and gloom thing, but at the same time, we have to be careful. So I hope you guys are practicing all the social measures that you can, face covering and stuff like that, because to me, I like to, it's better to be safe than sorry, and if I can do everything to protect myself, my family, then why not, right? Okay, let's jump right into it. The first article, despite all the noise that we're hearing about the S&P, the Nasdaq hitting new records, the Dow, guess what? Bitcoin is still outperforming all the markets for the first half of the year. So, and when I first read that, I saw the article, I'm like, what? Because when you turn on the even news or, hear any information, all you hear is the S&P, there's the Nasdaq hitting new highs. So you would think that these markets are just like, leaving Bitcoin in the dust. That's not the case. So for the first part of the year, when you look at the numbers, Bitcoin is still outperforming the Nasdaq, the S&P, and the Dow in terms of percentage gains. That's amazing, right?
Right. And what's so interesting is actually Bitcoin has been less volatile than it has ever been. Right? So at this point, and we've seen it, right? We've been following the past few months. It's been the 9 to 10,000 range. It's just stay in that range.
Yeah.
Between 9 to 10. It hardly dropped below 9,000. And yeah, it hardly went up above 10. It broke 10 a couple of times, but
Yeah.
pretty much that's what. So the volatility, it's a lot lower than it has been in the past. And also what's also interesting is the stock market, the Nasdaq and the S&P 500, and why they're up so high. Right? Besides Nasdaq, right? Besides Netflix and Amazon, why they're so high? We know why they're so high.
Cheap money.
Everybody's home. No, cheap
yeah,
money,
yes.
Right?
That is true. That is true.
But
Yes.
Netflix and Amazon, of course, they thrive in this situation. But now the other companies, the overall stock market is because it's been propped up. It's artificially inflated because all these cheap money are coming. All these money that are being printed. Where else are you going to put the money? Right? The money. A lot of people believe this money is not going to worth as much as before. Obviously, so the only places to put it, of course, is the stock market or the gold, the commodities, or Bitcoin.
Mm-hmm.
And the stock, that's how the stock market is being artificially inflated. Right?
Yeah, I think, Jin, you're absolutely correct. Robinhood saw a several-fold of increase in new account openings since the stimulus checks became available. So go ahead, Jin.
Right. And when you talk about the Robinhood, they were saying that since when they were getting the stimulus check, that $1,200 check, they were getting lots of transactions at $1,200.
Yes, that's I've heard that too. Absolutely. One of the things I believe, and don't be surprised if we see the markets hitting all-time highs and the unemployment increasing. So we could easily see a 30% unemployment and see the Dow and the Nasdaq and the S&P hitting records, because the more money that the Fed print and pump into the system, the more it's going to drive up the equity price in the markets. And I think a lot of times people have a very difficult time realizing that the stock market is not the economy. And that's a big mistake that we make a lot of times, because, and it's actually, it's a double-edged sword, because it also makes a lot of people feel, depressed, because if your situation is like really, really bad and, you can't find a job that you would like, and you see the stock market hitting all-time highs, do you think there's something wrong with you, right? And that may not be the case. The reason why the stock market is hitting all-time highs is because the Fed is printing up all this money, and all that free money is going to find its way absolutely into the market. Now, eventually, and I've been saying this for a while, eventually we see a lot of that money will flow into gold and Bitcoin. But I think in the short term, a lot of free money is going to find its way into the market, and that's why we're going to see all these inflated equity prices.
Yeah, so how long would they be able to artificially keep this market afloat?
That's the big question, Mr. Wong. That is the question, right?
And
how
in
long
fact,
can you keep this up?
Yeah, you bring up a very good point, Gershom. I mean, we're seeing this phenomenon not only in the U.S. but across several different, large economy and countries. China, for example, is a prime example. Not a prime example of this phenomenon that is happening right now. Hong Kong is another market that is happening, where they see a large number of unemployment, but at the same time, the stock market is at an all-time high. So it's crazy.
It also happened in Venezuela. In Venezuela, think about this. In Venezuela, when the economy was crashing, you guys hear the stories, people were actually eating the zoo animals. That's how desperate they were for food. But while that was happening, the stock market was hitting all-time highs, right? And as I said before, a lot of times we just can't really, process that. How is it that you can have high unemployment, at the same time, the stock market is in all-time highs because the stock market is not the economy.
Right.
Yep.
Right. And I think we have to really come to terms with that. And then once we understand that, then we don't get caught up into the fictitious numbers that we see in the stock market. Right. So that's what's happening. Like I said, Mr. Wang, not just here, but in other places, that's exactly what's going on.
All right. And also, well, one of the reasons why the stock market is going higher and higher, and with the unemployment down and inflation high, is because the money doesn't worth much. Right? So the money doesn't worth anything. If you compare it, of course, something has to go up. The stock market goes up. Your food prices go up. Right? Those are the things that goes up.
But you know what they say? What goes up must come down. Right? What goes up must come down. And the more, and another thing we have to think about, and actually, our video for today that's coming up is going to talk about that. But the higher they inflate this market with fake money, the harder it's going to crash when it does crash.
Yep.
Right? The higher it goes, the harder it's going to fall. So in the immediate time, some people may feel good. The market's going up. If you're a trader, you can trade the market. You can make your money. But when this thing comes down, it is going to come down hard.
Right. But before it comes down and the markets are going up, also the sad part is, you know who's benefiting from the market going up? Not the day-to-day people, not the middle class or the lower middle class, right? Not the people that are paycheck to paycheck.
Absolutely not.
So it's usually the well-to-do, the better-to-do people. Are the ones that are really benefiting from the market.
Absolutely.
Right? So and that's the sad part. You know, all this free money is going to. It feels like going to the poor, going to everyone.
Yeah.
But it's actually it goes down to the poor and then it floats to the top. Right.
One of the things that we just learned. Once again, Mr. Wang, didn't mean to cut you off there. But one of the things that we just learned, and the Treasury Secretary just came out and said that, Stephen Mnuchin, is that. So for a very long time, they didn't want to disclose which companies were getting these loans, right? The PPP loans. And then they were forced to disclose it. Then he came out and said, by the way, those companies that got loans that were $2 million or more than likely those loans will be forgiven, right? So who's getting those loans of $2 million or more? The rich multi-million corporation.
Right.
So that means the mom and pop business, a small business, they're getting loans $100,000, $200,000. They got to pay that back. They have to pay that back. But the guys that's getting 2 and 3 and 4 and 5 millions, don't pay this back. It's amazing how the system is set up. I mean, when you see those things, it's like, wait a second. The guys getting the big loans, $2 million, $5 million, that's going to be forgiven. But the small mom and pop, they're getting $100,000 loans, and those got to be paid back. How does that work?
And you know, Gershom, and that's the reason why I like about Bitcoins, right? It's completely decentralized, right? It has nothing to do, or you don't need to know somebody in order to benefit from it, right? It's totally fair. So
the system is corrupt.
Our current system is just rigged, man.
It is corrupt. It is corrupt. All right,
totally.
Moving right along. Bitcoin, 300,000. Okay, now, once again, another big number, right? And I know that we keep hearing these big numbers, and, you know, we're saying to ourselves, can this really happen? Well, here it is, another well-known Wall Street guy that came out and said, hey, he's been involved in Bitcoin since like around 2013, right? And he has seen all the ups and downs, all the bull markets, the bear markets, the bull market, the bear market. And I think he manages about maybe $5 billion on a management, something like that. And he's saying, hey, look, this next bull run, when it comes, and it's going to come right now, as I said before, we're consolidating, you just mentioned it, between the 9,000, 10,000. But when this next bull run comes, who knows where it's going to go? But what he's saying is that, hey, you know what? He can see Bitcoin getting up to around $300,000 per Bitcoin. Again, we don't know, but to me, based on what's happening right now and based on what Bitcoin has done in the past, I think that's possible. What say you, Mr. Wang?
I read the article. Thank you for sharing that article, by the way. in the article, he didn't really do a technical analysis as to how he came to that number, but the article does point to a couple of very interesting facts, he pointed out that back in the 70s and 80s, actually, a lot of the fund managers and asset manager would advocate people to actually de-risk their portfolio by owning a certain percentage of their portfolio, hold certain percentage of their portfolio in gold.
Yes.
Right. And so he makes that the connections, that today you should still do something, you should still do hold something in gold, but then also de-risk it by putting some in Bitcoins, which makes a lot of sense to me. And that's what we're advocating in our channel all the time. You want to be able to de-risk basically your holding, so that you stand a better chance for when it comes to the next market crash. Also, secondly, he mentioned that Bitcoins today is a lot less risky as it compares to when it was $100 back then, because
that's an amazing point, by the way.
Exactly. Yeah, when Bitcoins was at $100, you don't really have that, that adoption yet. It's basically just a bunch of core people that believe in the ideology that gets together and start trading among themselves. Fast forward, 7-8 years today, right? You have institutional investors that are in the arena. So, by that, fact, it makes it a lot less risky, because now you have a lot of the professional money managers that are in the Bitcoin market,
that's
the
an
Bitcoin
excellent
arena.
point, man.
Yeah.
Yes, that's heavy right there.
Yeah.
Right. And speaking of institutional, yes, we've been talking about how all these institutions are coming in, and right here, a perfect example. This guy is a Bloomberg researcher, right? So it's these are more traditional companies that are focused on traditional companies, traditional researchers like stocks and equities, right? Before we have the Tom Lee guy, the Tom Lee, he was an analyst.
He was the guy out front for a very long time. More
about Bitcoin, right? Before it was just him. Pretty much he's a lone
the lone wolf out there, right?
Or the Lone Ranger without the mask. But now you have these prominent these guys are more mainstream guys.
Another excellent point. Absolutely.
Right?
Yes.
And we had JP Morgan, we had a lot of researchers and analysts from JP Morgan already talking about it. We have now Bloomberg. And we had Goldman Sachs who poo-poo on it. All right, these guys are still poo-poo on it. But we'll see. I think in due time, those guys will be converted. And
listen,
we'll just wait and see.
I would not be surprised if in the future it gets out in the public that all this time Goldman Sachs is buying up Bitcoin. I would not be surprised.
Exactly. Yeah. Exactly. That's what JP Morgan did.
That's what. Right? Yeah. JP that's Morgan what these guys do.
Bashing Bitcoin, but behind the scene, they were developing their own coin. They were talking to these guys in the Bitcoin, the big guys in the Bitcoin industry.
That's what these big banks do, man. There's one more point that was made in the article. I kind of want to bring it up real quick. And what he's saying is, whatever amount you invest in Bitcoin, you can lose 100% of it. So, whether it's 5,000, 10,000, 100,000, $1 million, whatever, you can lose 100% of it. But you can gain 1,000 times what you put in. Right? And you and I talk about this for a lot of times.
Right.
The risk reward, right? With any investments, what's the risk? What's the reward? And he's saying, whatever you invest, okay, you can lose the whole thing, 100% of it. But you can make 100 times what you put in, 1,000 times.
Right.
So when you look at it that way, when you factor in the risk reward, hey, it's a safe bet for me, right?
All right. Now when he says 100 times the return, that is not 100%.
No.
100 times actually.
I mean, 100 times whatever you put in.
Is that 1,000% or 10,000%?
That's 10,000%.
10,000%.
Right. So
Yep.
yeah, 100 times of what you put in.
And those are the kinds of return that you can get with an asset class like Bitcoin.
Right.
Right. You know, it's funny. when we, you know, a while back, I would hear people talk about, oh yeah, the S&P. I had 28% this year. I'm like, I would laugh. 28%, please give me a break.
It's still pretty good. I wouldn't laugh at
it. No, it's still pretty good. Right. But the reason why I would laugh at that, because the very same people who were saying that were the very same people who were poo-pooing on Bitcoin, right? And here, Bitcoin over here is giving people 300%, 1,000%, 1,500%, right? Mm-hmm. And they're over here talking about 28%, and they're laughing at people that's invested in Bitcoin when they're getting, you know, triple digits return. Right. So yeah, that always fascinated me when I hear people talk about that.
And good point about the risk and reward, right? Yes, if you have 1 to 5% of your asset, if you lose it, yeah, you lose all that 1 to 5%, which is that's 100. You lose 100% of that 1 to 5% of your
exactly.
asset. Is it going to affect your portfolio much? Very little in your portfolio.
Well, not to cut you off. That's what Paul Tudor Jones said. He said, "Look, I'm gonna put 2% in. If I lose a 2%,
right,
it won't hurt my portfolio."
Same thing what this guy is saying. You know, and same thing we've been saying, right? But if you put a few percent, and that few percent gains 100 times back, which is 100,000%. You know, that's going to lift up your portfolio. That's going to change from being a normal person,
yes,
to higher middle class or even upper class.
Absolutely, 100%.
But if you're losing that few percent, it's not going to change. It's not going to put you down.
It's not going to. Yeah, it's not going to hurt your portfolio at all, if any.
But if that thing works out, it will put you up a notch.
Yeah.
So that's why we are talking about Bitcoin. That's why we're bullish about it.
That's why we're trying to bring the news to you guys, so you guys can understand. These are things that you're not going to hear these type of conversations on CNN or Fox or MSNBC. You may hear a little bit, but you know, you're not going to hear what the insiders are doing, right? So that's why we try to bring you guys this information to let you know what the insiders are doing or talking about.
Hey, gosh, speaking of the party poopers, right? You know,
the party poopers, I love it.
So you know, back in the 80s, let's say, as you know, or 90s, you couldn't possibly go public with your company unless you have a clear path to profitabilities or already be in profit, right? Now fast forward, and you know, so in 2000, during the first wave of the internet, you know, booms, what happens? We have hundreds of companies, you know, start going public with just an idea and maybe simple proof of concept with no path to profitability or even how to monetize on their business models, right? That's really how Facebook went public. That's how Google went public. And Google went public. After it goes public, it started buying up a bunch of companies that you know, for billions of hundreds of millions of dollars that don't have a path to profitabilities, already in profit, right? But guess what? You know, just like these party poopers today, back then Goldman Sachs wouldn't underwrite your stock back in the 80s and 90s. But then change, right? They start underwriting these tech companies or these new styles of companies, right? Such as Google or Facebook, and bring them to the public market. So I agree with you guys. I think it's just a matter of time that they're going to turn around. That, you know, they're going to start, you know, jumping onto the Bitcoin wagons. So.
They will have no choice. They will have no choice. Okay, so today's video that we have for you guys, interesting. So I already had the articles and video that we're going to use for today. I already had everything set up. And then I saw one of our members post this video in our Telegram chat group.
Okay.
And I was like, okay, good. I mean, this must be a really good one, just to show today. And then another one of our members posted that very same video on Facebook. And I was like, oh, this must really struck a chord with a lot of people, right? So then I was thinking, maybe I should play another video, because I had like 3 videos lined up that I could use either one. But then I thought to myself, no, let's use this one, because if 2 of our members already saw enough material in this video to share it with us, not only in our group, but also on Facebook, they must see something there, right?
And so,
yeah, absolutely. So today's video, it's not long, maybe 10, I think like 12 minutes long, but it's with one of our favorite person, Robert Kiyosaki, right? And he's pretty much talking about, listen, we have to start paying attention to what's really going on and start to prepare ourselves for what's coming down the pike, right? So I love videos like these. I watch them all the time. So when I first saw it, I knew I was going to play it. But then to see 2 of our other members also want to share it, I love it. So let's check out today's video. And guys, pay attention. It's not about doom and gloom, right? Don't look at it that way. It's about getting you prepared for what's coming. Don't get caught up in all the, the stock market hitting all-time high. No, reality is things are not what it seems, okay? So let's check out this video, and then hopefully I would like to get some participation from our audience. What do you guys think about what's been talked about in this video? So James, whenever you're ready, sir, please go ahead.
They can't save us. It's gone too far. And instead of fixing the problem, they just kept making the problem worse. I hope I'm wrong. We're going to go bankrupt. There'll probably be a new conference like the Louvre Accord or the Smithsonian Accord, and they're going to rewrite the rules of the game again. They're going to say, okay, the US dollar, you're toast, and IMF's going to jump in, China's going to jump in. But meanwhile, you and I, if you're holding dollars, you might be in serious, serious trouble. One of my tweets was New York City going broke. And the reason New York City is going broke is much of the property in New York City is commercial real estate. I own residential real estate, so we're doing pretty good. But in commercial real estate, with everybody zooming away and at home and all this, the question is, who's going to go back to work? Who wants to pay that high price for that commercial real estate? But worst of all, what value is commercial real estate, like an office building, if you don't have workers in it? All cities count on real estate taxes. So what you're going to see in the next few years is real estate taxes on your home. My apartments will go up. But when New York taxes those commercial high-rise buildings, more tenants will leave. So New York City is going broke. The beautiful city of Vancouver, Canada, is flat broke. It's just tragic what's happening, because you have these incompetent city managers who are just like my poor dad, guys with college degrees, but no common sense, you know what I mean? All the cities now count on taxes, but if small businesses closing and big commercial real estate starts closing, our cities are going broke. You add to that pensions. Pensions, mark my words, I wrote my book called Who Stole My Pension? Pensions are going to be the biggest disaster hitting America and the world today, because every day 10,000 baby boomers in America retire. Across the world, there's 2 billion old guys like me who have no money, and who's going to bail them out? And no Republican or Democrat is going to say we're not going to pay the old guys money. So that means the old guys, they're going to say, you got to bail us out. And so naturally, they're going to print more money and pay the old guys just so they get reelected. So it's real estate taxes, it's small businesses going broke, it's income taxes going down, and pensions going down. So the Fed has to print more money. So that's why I keep saying buy gold, silver, and Bitcoin, because gold is getting more scarce. So let me explain why gold. So my prediction is gold in 1 year should be $3,000. So that's about $1,000 more than it is today. So in a year, it should be up another 1,000. Some people say 2,500 is optimistic. But I'd rather have the price of gold going up than your money going down. So if you're saving money, I'll pray for you tonight, because your savings are actually real money. In other words, if you worked for it and you paid the taxes on that money you worked for, that's real legitimate money. Unfortunately, the Fed is printing trillions, and they're going to pay you nothing for your savings. I mean, when I was a kid, I got 15% on my savings. Today, you get nothing. So the Fed is screwing you. That's the term. So I think gold at 3,000 in 2021, not outside the box. Silver, $40. And the reason I like silver is moving faster than gold today. And when I look at the price of gold, the high point was $1,900 approximately. I don't know what, a couple of years ago. But today it's $1,700. So gold is near its all-time high. Silver used to be about $49. And today I think it's 18. So it's about 70% below its all-time high. So silver is the best deal of all. And I think most of you can afford a $20 silver coin. If you can't, you have deep problems. The reason I like Bitcoin is because what I understand about Bitcoin is that it just had a halving. And a halving means they print less of it. At the same time, Bitcoin is printing less, the Fed is printing trillions. Now, you don't need a degree in rocket science to figure that one out. The Fed is making the US dollar, or any currency, the yen, the euro, the peso, softer. Bitcoin is getting harder. Gold is getting harder. Silver is getting harder. I don't buy gold, silver, and Bitcoin to get rich. I just hate getting screwed by the Federal Reserve Bank and the Treasury. So if you want to keep saving money and putting it in the stock market, more power to you. But all that paper stuff is printed. And the CEOs of these stock market companies, they did a side deal with the Fed. So the Fed was loaning them billions of dollars for them to jack their stock price up. So the stock prices are at this artificial high, and all mom and pop are watching their 401ks or IRAs, and the stocks are this high. And the Fed keeps printing more money, keeps giving the CEOs indirectly, because they can't do it directly. They do it through what's called SRVs, special something vehicle. And they give the CEOs the money and they pop the stock market up. That's why we're in serious trouble. That's my opinion. I hope I'm wrong. But I would rather, at this time in world history, May 2020, I'd rather have gold, silver, and Bitcoin. Thank you.
Do the rich people cringe and say, don't tell them that, Robert?
Yes. Don't tell people what you know. Right. Keep them poor.
Okay, guys, I really hope you guys are paying attention to that video. There's a lot of nuggets in there. And when you have someone like Robert Kiyosaki talking about these things, you can't take it lightly. This is a guy that wrote one of the most popular books in history when it comes to finance, right? Rich Dad, Poor Dad. I know, Mr. Wong, you've read that book. Most of us have read that book.
Sure.
And I've got so much from that book. So this is a person that comes with very high credibility. And he's saying to us, look, and these are things that we talk about all the time. The pension system is broke, right? Most of these cities are broke. And at some point, all of this is going to overwhelm the Fed. Just mentioned this. How much longer can they print all this money to prop up everything? They're going to bail out Wall Street. They're going to bail out these pension funds. They're going to bail out all these cities that's going broke. At some point, this entire thing is going to come to a screeching halt. And the question is, how prepared are you? That is the question. How prepared are you? And so when I first saw the video, I knew I wanted to share it. But then when I saw two of our members also share it, I knew I had to share it. And so I hope you guys are really listening to what he's talking about. You better start preparing yourself. And if you're not doing what we're doing, part of our company, this is not like a sales pitch, But I do know that what we're doing is helping people it's like an escape hatch from this current system that is failing right before our eyes. And so I hope you guys take it serious, and I hope you're taking measures to make sure that you are protected and that your family is protected.
Mm-hmm. Yeah, actually, Robert Kiyosaki, he was one of the big reasons why I got into real estate. When I first got in, I read that book, of course, which had Poor Dad, and really buying up real estate. And we started with residential, and then later bought more commercial properties, simply easier to manage for us. And we are seeing it right now. Actually, in the last few months, I would say probably 40%. 40% of our tenants, our commercial tenants, really hasn't paid us in the last couple of months. One says, a couple of them said that they were sending their money, so I'm still waiting for their money to come in. So it's correct. These commercial property owners, they're in trouble. Right? Luckily, we have some savings set aside. All our properties are pretty well capitalized, and we just manage our money pretty well. We save enough money to pay for mortgages and taxes, because those don't go away. Your real estate tax and your mortgage, you'll continue to pay. Even obviously your tenant, they're not paying. So I do see that coming, right? And when that happens, right? What's going to happen to the first? Yes, you got a commercial real estate. Is it going to hit the residential real estate? When the whole economy is starting to have problems, yes, it's going to hit everywhere. But I do agree, the commercial property is getting hit first, and it's going to get hit hard, right? Because with us, we're seeing it already.
And also, Jen, this time around is very different from the collapse of the 2008, where people were, especially these investment banks, were coming up with these exotic CDLs and products, right? As long as you're not in the real estate, you're less likely to be affected, or if if you don't have a loan. But in this pandemic, everybody is affected. This is truly kind of no one's escaping kind of a deal situation. So, yeah, so people, you're going to have to really reevaluate your portfolio. Now, obviously, everything that we talked about here are our personal opinions. We're not trying to offer you any expert advice here, but it is what we believe in. And that's what we're doing. You really have to really sit down and reevaluate your own current unique situation and see how you can minimize the risk of your portfolios. Gershom, you were asking earlier, actually, Robert Kiyosaki was saying, when are people going to realize that, that the Fed is actually stealing money, basically, right? These big corporations kind of like stealing money out of us. I think people will wake up to it when they realize that, you still go to work for 8 hours, 10 hours, or 12 hours a day, right? But then the money that I'm going to pay you, it may sound like, you're making more in terms of the dollar-wise, but the value-wise is slashed in half. That's when people are really going to wake up and say, you know what, I'm basically going to work and getting half of the pay. Right. So
yeah, and I think as time goes on, I know that we see all these protests, and I know what triggered the protest, but I think as people start to wake up and start to realize what's going on in our banking system and our financial system, and realize, just like I said, Jason, how the system is robbing them, because the Federal Reserve is the system. And when more and more people wake up and realize how the system is robbing them, I think we're going to see a different kind of protest, but that's another conversation. But so Jason, you just mentioned something that we're going to talk about in our final article, the coming banking collapse. And that may sound a little extreme, but the banking system, that's one of the biggest customers, if you will, of the Federal Reserve. A lot of money that the Fed is printing is going directly into the banking system. And the banks are in trouble again, because what happened is in 2008, when we had the financial collapse, that collapse was brought on by the subprime mortgages, right? Because so Wall Street was creating these exotic products, they call them CDOs, collateralized debt obligations, right? And what they would do, they would package all these subprime mortgages, maybe sprinkle a couple of good mortgages in there, but 98% of them are bad mortgages, and they would package them, get their buddies to stamp them AAA, and then sell them to other investors in the open market. And then those loans went bad, and it bring the whole thing down. So in order to offset that, when that happened, they did the Dodd-Frank Act, right? The Dodd-Frank rule came out, and so the banks couldn't really do that anymore, the Wall Street guys. So what did they do? They come up with a new product called CLOs, collateralized loan obligation, right? So they went from mortgages, and then they went to businesses. So what they did, all these businesses that maybe their balance sheets weren't so healthy and they couldn't get a proper loan, so they would get all these almost like subprime loans, but not for mortgages, but for businesses, right? And they did the same thing. They package all these business loans and sell them to investors. Now, those loans are going to start going bad, right? And so that's going to bring to our doorstep another situation where the banking system could collapse. Now, the question is this: can the Fed bail them out again? That is the question. So, hey, look, with this article, you guys should read it. I know that it's going to be in our live stream. I could drop it in a Telegram group later. You guys should read this article. And then you couple that with what Robert Kiyosaki is saying and all the things that's going on. Once again, I really hope you guys are paying attention, because things are going to get ugly. It's going to get ugly quick.
Mm-hmm. I think it'll get ugly, just like the last financial crisis, the last banking crisis we had. But I really think also it will survive too, because I don't think there's no way the Fed's going to let the banking system fail. It just can't. It simply cannot. But what's it going to do is going to make a lot of people unhappy, just like what it did before, right?
They're going to pitchforks.
Yeah. And actually, funny thing, and that's how Bitcoin got started.
Yes.
Yep.
Right.
100%.
Got started it during that crisis when the banking system collapsed. Right after the collapse, that's when Bitcoin came out. Right. It's because we want to take the power out of, give more power to the people. Let the people decide what to do about currency. Now put the financial power back into us, into the people. But still, I still see the federal banking structure or system it's hard to collapse. It might challenge it. It might be challenged, and the good thing is when it's challenged and a lot of people are unhappy, the people with Bitcoin are happier. And that's another thing.
That's a great way to look at it. I love that. Yes, yes, that's an excellent way to look at it. That's awesome.
Yeah. We need some leadership change, and that's what it is. You know, if the very reason why we fail, the financial market failed because of the CDO, right? And then as soon as it failed, we bailed the Wall Street out. They came up with CLOs. It is almost like, you know, when I try to tell my kids, hey, you cannot drink soda, right? You know, so I'm gonna ban you from drinking soda. There's a dark flank, right?
Yeah.
I'm gonna ban you from drinking soda, but then I keep my eyes half shut and saying, oh, it's okay if you go drink as much of a juice as you want. It's just as bad.
That's a great analogy. It's awesome.
Bad parenting. You know, it's bad leadership. Yes. It sounds to me like we need some serious leadership change, and those big Wall Street guy needs to be eliminated and just replace it with some other, you know, different types of leadership.
Here's what we need, Jason. We need leaders that can make tough decisions. And I think right now we don't have leaders that can make tough decisions, right? Because the thing is, this system, in my personal opinion, is unfixable. Now, to fix it, a lot of pain will be experienced, and no one wants to be the person to administer the pain.
Yeah, because they won't get reelected.
There you go. There you go. And so what we have is this constant kick the can down the road, print some more money, kick the can down the road, print some more money. At some point, that can is going to hit a brick wall. And I hear you, Mr. Gao. Yes. Will the banking system fail? No, because the Fed will come in and bail them out. But how many times can we keep going to that well? Right? At some point, doesn't matter how much money the Fed print, it's not going to work. You cannot keep running a system like this. And so, yes, I think we all know that the system needs to be fixed, but no one wants to step up and make the tough decisions. And until that happens, you know, there's a funny saying, this thing called economic mother nature. You know, I don't want to say what they say, it's too graphic, but they say economic mother nature is a bee. And when she rears her ugly head, it's gonna be you know what. So all I can do is, as an individual, I can offset myself from this system, mine Bitcoin, mine Bitcoin, mine Bitcoin. That's all I can say.
Perfect. I think, well said, Gershom. That's mine Bitcoin.
That's mine Bitcoin. All right. With that being said, guys, live stream once again has come to an end. Always appreciate you guys joining us. We love all of you. Hope you guys know that. Any last words for the folks, Mr. Wong?
Hey, please stay safe, guys. I mean, this thing is, you know, COVID-19 is still very, very serious and active. And it's, as I read one of the articles, one of the counties down in Florida, 23% of the tested people are positive.
Whoa.
All right. Almost 1 in 4 are
That's a
positive.
big number.
That is a huge number. That's a scary number, by the way. So it is very serious. Please do your part to stop the spread. All right.
Oh yeah. If those people stop testing it, they wouldn't have it.
And I'm gonna show you my
different topic.
virtual background picture. And, can you guys see my virtual background picture?
I can see a background picture, by the way.
With a mask on.
Sure.
That's right. Can you see it or no?
No,
virtual
I cannot see. Can you see?
No.
It's Arizona?
No, it's me with a mask on it.
Oh.
Okay.
No? Okay. Maybe we'll. All right, technology. Maybe we'll do that next time. Yeah.
Oh, hashtag, is that mask up? Is that what that is?
Yeah, mask up. Yep.
Mask up. Okay. All right, guys. Look, don't forget to our next live stream is next Monday, 5:30, same time, same place. And then as usual, our webinar at Monday night for Comstructure. With that being said, guys, have a great weekend. You guys take care of yourselves. Be careful. We love you guys. You guys love each other. Take care of each other. And we'll see you guys back here Monday at 5:30. Have a great weekend, guys. See you guys later.
Have a great weekend, guys.